We've seen the writing on the wall for a while. European and Western governments have been talking about critical raw material supply chain resilience for quite a while now, but this has really been turbocharged, particularly in the last 12 months. And I think the urgency of this has really been highlighted by some of the moves to restrict the flow of critical raw materials in the last few weeks and months. And that's culminated in really the rubber hitting the road in places like the US and Europe. And in Europe now we have the European Investment Bank investing in projects like ours and really cornerstoning these projects to get them built to contribute to that supply chain resilience in Europe. So we have got shovels in the ground going in tomorrow, which is great now that we are fully project financed for our first phase of production. And it's a 2.5-year build for this project. So by 2028, we'll be producing first lithium to sell to our customers. We're fully sold out for the first 10 years of production from our first phase, acknowledging that there will be further phases of production that we will be developing as well. And we will be selling them to European or European-focused customers, including Stellantis, which is a large automotive group. They cover Opal, Peugeot Citroen, Fiat Chrysler, Jeep, etc. And we also have LG Energy Solution, Umicore, and Glencore as our main off-takers. So one of the unique parts of this project, we're producing lithium from a deep subsurface brine deposit. And because we have renewable heat embodied within the brine, so it's a hot brine, we can produce very, very cheaply because we're actually using the renewable energy to drive that lithium extraction process. So our cash costs are very low. Our cash costs will be about 4,000 a tonne, or even less actually, about 3,500 euro per tonne. On the other hand, we have offtake agreements in place which have fixed and floor prices in there, which give us an average pricing for the first 10 years of about 20,000 euro per tonne. So that gives us a very high EBITDA margin, which we're targeting of around about 75%. So if done correctly, the margins can be pretty sound. But I would point out that the lithium price is tremendously volatile. It will continue to be so. Well, there was already infrastructure there in place. So what we're using is we're utilizing a geothermal lithium brine resource. And in the region where we're operating, they already have these existing wells which are pumping this hot lithium-rich brine up to the surface. So it was about utilizing that existing infrastructure. We are looking at Australia in the future. I think we've got some growth ahead of us in Central Europe, but we'd love to develop a project in Australia in the future if the lithium brine resource conditions were discovered here on the same basis. I think so. I think anything that lowers the cost of energy self-evidently will help industry get back on its feet. I think it's really important that in the West we focus on that cost of energy first and foremost, so we can get manufacturing growing again. Similarly with us, so we're selling renewable heat, baseload renewable heat actually, which local industry is using in the Rhine Valley, and that's helping the chemical industry over there. So. Absolutely. I mean, energy cost is key wherever you are. So it's all going towards building this phase 1 commercial project, and that will produce enough lithium, about 24,000 tonnes per annum, enough lithium hydroxide for about 500,000 electric vehicles per annum. So it's going directly into the batteries for electric vehicles in the European automotive market. Thanks very much for having me on. Cheers.